Hi and welcome to Swissquote's Daily Market Talk. It's Monday, 24th of August. The week starts with renewed AI financing worries just as Nvidia prepares to announce its second quarter earnings on Wednesday this week. Rather, the rising debt levels in developed economies, high energy prices, and stubborn inflation keep pressure on global yields as U.S. Treasury Secretary Mr. Bessent's efforts to contain long-term borrowing costs contrast with the Federal Reserve Chair Kevin Warsh's preference to let the markets price the risks. So all eyes and ears will be on how Mr. Bessent and Warsh views will play out across the bond markets this week. And we will talk about all that and more in this episode. But before we do, and as always, please keep in mind that opinions are my own and this is not financial advice.
This show is brought to you by Swissquote.
So on Friday, opposing crude rally and encouraging data from Europe and US gave support to equity indices on both sides of the Atlantic Ocean. In Europe, despite soft services PMI reads across France and Germany, the improved manufacturing numbers for August boosted appetite for the Stoxx 600 index. In the US, the S&P 500 rebounded as well, and that rebound was mostly on the back of strong PMI reads as US crude spot price also remained capped near the 100-day moving average despite tensions. This morning, oil is weaker and the latter helps easing pressure on global yields as everybody is waiting for what Bessent will say in terms of fiscal consolidation in the US, yet risk sentiment remains dull. Technology companies especially are kicking off the week with heavy losses. In Korea, for example, Samsung Electronics is down by nearly 9% at the time I'm talking here this morning, and that despite its latest share buyback announcement. In Hong Kong, Alibaba free dives as well, nearly 10% this morning as news that they will issue new equity to finance AI spending displeased investors, while in Japan, SoftBank slips nearly 4.5% at the time I'm talking here after announcing its own plans to raise capital through share sale as well. And as I said last week, with strong second quarter earnings already baked into market prices, the renewed AI financing worries and geopolitical headlines are gently taking control of the market action. Trade tensions, on the other hand, are back in the headlines this morning following the US and Canada's failure to reach a trade agreement. Tensions in the Middle East continue to disrupt oil flows without an easy resolution in the short run, and debt levels across the so-called developed world keep rising, with the US $40 trillion debt burden now sitting like an elephant in the room. So in this context, energy prices will continue to matter, but the way Washington is trying to manage its fiscal and monetary policies will matter as well due to its impact on US borrowing costs that, on its turn, ripple through the global financial markets and global borrowing costs. So this week, all eyes will be on Nvidia earnings due on Wednesday, but also on Jackson Hole meeting and how Mr. Bessent and Mr. Kevin Warsh could work out their differences in terms of how they would control the US yield curve. Now let's start with Nvidia and we'll come to Bessent Warsh very quickly. For Nvidia will close the earnings dance this week on Wednesday and expectations are enormous, obviously. Second quarter revenue is expected near $92 billion. That's up roughly 97% year over year, while Vista estimates are even higher than that, around $93 to $95 billion in revenue. While stellar results may not guarantee a positive market reaction when the market sentiment is souring regarding the AI heavyweights recently, evaporating free cash flow levels at major big technology companies, who happen to be Nvidia's biggest customers too, revived AI financing worries during the second quarter earnings announcements. And the fact that two big names, Alibaba and SoftBank, are punished today for seeking more financing through new equity sales gives an idea on how fragile the overall market sentiment has become regarding the AI complex due to the financing worries. As such, Nvidia may not save the day on Wednesday when it announces its earnings after the bell, even with great quarterly results and shiny guidance. Now, zooming out, the macroeconomic setup is not brilliant either. Global yields, which are now under pressure due to rising energy prices due to the Middle East war, failed to come lower after US Treasury Secretary Bessent announced last week to double the amount of long maturity US debt that it could buy buyback. The letter failed to convince investors to buy US debt along and raised serious questions ahead of this week's Jackson Hole meeting. So the attention today is very much on how Kevin Walsh will react to these latest developments. In fact, if you're looking into this saga, Bessent, who is moving toward a more interventionist, yield curve control-like strategy to tame pressure on the longer end of the US yield curve, needs actually Walsh to play along by keeping monetary policy as supportive as possible. That means he needs low interest rates. But Walsh, on the other hand, wants market to do more of the work. He wants to move away from heavy Federal Reserve forward guidance, and he has been very much critical indeed of the Federal Reserve's oversized balance sheet and the US inflation that is now running above the 2% target for half a decade. Now, the fact that the US Treasury will be buying more bonds won't grow the Federal Reserve's balance sheet. This is not quantitative easing, remember, but it could prevent the market from fully pricing inflation and fiscal risk and reacting to Fed policy decisions. In other and simpler words, the US Treasury's action could interfere with the transmission of the monetary policy to the economy. As such, it could make the Federal Reserve's job of bringing inflation back toward its 2% policy target was somehow harder to do, and that's something Kevin Walsh probably wants to avoid. If nothing, to avoid looking like a fool in front of the entire world. Now, honestly, I doubt that, but if Treasury actually does succeed in pushing long-term yields materially lower while oil prices are rising in tandem and inflation remains above the Fed's target, well, it could eventually impact the long-term yields in the US, and financial conditions in the US would loosen, and that regardless of the Federal Reserve's input into the cake, and the letter would keep inflation rising. So there is a fascinating institutional tension right now in the US. Walsh is effectively saying, let the market price the risk. While Bessent is saying, not if that market pricing makes US government borrowing prohibitively expensive. And that's why Jackson Hole meeting this year could be explosive. Walsh needs to regain his credibility after his latest post-FOMC presser confused investors regarding his reaction function to inflation. So if he decides to use the Jackson Hole speech to reiterate the 2% inflation objective and resist expectations that the Federal Reserve will rescue the US Treasury market, he would effectively push back against what Mr. Bessent has just done. And that without ever mentioning Bessent by name. But on the other hand, I'm thinking, well, Walsh was put in this position just a few months ago by the same US administration, meaning that he cannot just completely turn his back on the broader Washington plan. So what Bessent will say about the fiscal consolidation, how will Walsh react to the recent developments, and how will markets react to all that altogether will be the major topic of this week. At the moment, we no longer know who will ultimately control the long end of the US yield curve. Will it be the US Treasury Department? Will it be the Fed? Or will it be the bond market itself? Well, let me tell you something. In the wake of last week's reaction to Treasury's announcement, the market still says the last word. So maybe, but just maybe, this week's Jackson Hole gathering will manage to bring some clarity on how the Federal Reserve under Kevin Walsh will fit in this picture. But in any case, US yields won't magically fall while US debt keeps growing and Middle East tensions keep energy prices elevated. Remember, Bessent is expected to unveil a fiscal consolidation plan, and maybe as early as today, perhaps in an attempt to get ahead of the bond market. But whether investors will play along is yet to be seen. So it's going to be a big week, plenty of twists and turns, I think, and we will talk about all that throughout this week. But this is all for this Monday. I'm İpek Özkardeskaya, and thank you for joining me today. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below, as you do usually. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel, of course, for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.